Last time on Learn from the Money Masters, our celebrity investor Blair McDonough got a masterclass from veteran investor Kerr Nielsen.
Companies are at the absolute centre of our economic system. And so when you start thinking internationally, you need some grading mechanism to be able to choose which ones you want to own.
Kerr taught Blair what it means to invest in global companies and how to look beyond his own backyard for opportunities. Get ready to learn from the Money Masters. Blair and Pina are about to meet the Conroy family, who are all excited to meet the soapy star.
Blair, I wanted you to meet Caitlyn and her mother Carla. As you can see, Caitlyn is 8 years old and she's a happy and healthy little girl, but she's recently been through a pretty bad experience and I wanted her to share her story with us. So, Caitlyn, can you tell us what happened to you?
So I had a sleepover with my friend Isla, and the next morning Isla's mum said that I looked a bit pale, and she called my mum, and mum took me home, and I had a rash and bruising, and she brought me into hospital thinking I had meningococcal.
So we went up to the hospital then, didn't we, with Daddy, and was expecting, yes, to be told that it was something along those lines.
And Dr.
Neil
said that he knew that I had leukemia by just looking in my eye. My dogs probably knew about it, but Teddy was probably the first to pick it up because
the dog didn't leave her side for a week beforehand.
He just came straight into me and cuddled me.
Oh, wow. What was the scariest experience for you out of all of this, Caitlyn?
It's okay if you say all of it.
All of it.
Yeah, it sounds terrifying, but you know, it fills me with so much hope when you see such a strong little girl like this fight your way through, don't you? And you just keep getting up every day and keep marching.
She was very brave,
Yeah.
like braver than I think I could have ever been. And she was fine until she was told she was going to lose her hair, and was terrified of going to school with no hair. From that point on, she just sort of emotionally shut down.
Okay.
Yeah.
So she didn't speak for 5.5 weeks.
Not a word.
Not a word.
Yeah, they thought I had a brain problem because I wasn't talking, but it was because I was in so much pain from the tooth.
Right.
She had this extreme tooth pain, was on oxycodone for pain relief for a toothache, and in that time there was lots of other things that happened to you as well. She ended up with extremely high blood pressure, so she was on
7 different drugs
medications
for that.
to get her blood pressure under control.
I have a little girl and I can't ever imagine what you've had to go through.
Yeah. I wouldn't wish upon my
No.
worst enemy what happened to us.
And I'm so thankful that Mum was able to give up her job to look after me.
Blair, I wanted you to meet Caitlyn and Carla because they have family protection insurance, and what that's done is it's given Carla the option to actually stop working and look after Caitlyn.
Yeah, you know, I went home from work on a Friday and pretty much never went back. It was a 7-year-old little girl who she needed her mum.
Yeah.
I don't know how she would have coped if I hadn't been able to be there.
Yeah.
I was there for every single one of her procedures. I was there when she was taken into surgery. I was there when she woke up, put her to sleep in my arms. You know, there was no way I would have been able to work in reality.
So it is about having that foresight, isn't it? That just in case, I do not want to be stuck in that position.
No.
And look, we spend insurance on cars, for crying out loud. Why aren't we spending it on our family and
So
ourselves?
true. If the finances are taken care of, life can go on.
Yeah.
And you can concentrate on getting well.
Exactly.
Thank you, Caitlyn, and thank you, Carla. Thank you for being so brave and for sharing your story.
I hope it helps other people to make some sound decisions about their financial investments.
So what did you think, Blair? Was this what you were expecting to hear today?
No, it's very confronting, obviously, to hear such a full-on story with such a young person is very challenging. But, you know, the message in this, obviously, is to plan for those unforeseen circumstances so you can go forward and live to the fullest. And if something happens that, you know, it's going to change your world, that there is some safety net for you.
That's so great to hear, because it is, you know, particularly family protection insurance. It's probably the one thing that we don't want to be thinking about when we think about our loved ones and our children. And we're both parents, you know.
You say you don't want to go there, but we do it every day. You think about it every day about them possibly falling over.
That's
so
right.
why don't we think about it, them possibly getting sick? It's only a thought, but maybe we just plan for it.
Absolutely, absolutely. Just plan for it, and that way all you need to focus on is just getting better, because the financial situation is taken care of. So
Absolutely.
I wish you all the very best on the rest of your journey.
Yeah, it'll be great and it will be insured.
If you want to learn more about how to protect your family's future, visit theinvestmentseries.com.au to find out how. With a new perspective on life, Blair is ready to dive into more masterclasses with some of the top money managers from around the world. After the break, we meet Gary Lawrence of Perpetual, a long-standing financial services company with a legacy of building wealth for generations of Australians. Today, Blair will meet money master Gary Lawrence from Perpetual. Founded in 1886, Perpetual is a long-standing financial services company listed on the Australian Stock Exchange. The company manages around $31.4 billion and offers a broad range of investment strategies to suit different investors' needs and goals.
There's a world of opportunity. It's about finding those high-quality businesses and buying them at the right time when the valuation's attractive. When I invest in businesses, I think about, will this business be around in the next 10, 15, 20 years? And then I want to buy businesses that will continue to grow over that period of time. When I was growing up, my dad had a printing factory in Camperdown. Back in those days, there were quite a huge mix of businesses. Over the years, it was quite evident that some industries were flourishing and doing well, and often it was due to changes in the industries, and that's why it's really important to acknowledge those changes and invest in the opportunity set around the world as the world globalises. I manage the Perpetual Global Share Fund. I travel around the world. We have a team that works together looking at different industries, trying to understand how those industries function, how the businesses work within them. And we really go through the detail of the balance sheets and financial statements to get an understanding of how the business makes money and how it generates the earnings that it does. Perpetual's been around for over 130 years. It started off as a trustee business, focusing on growing people's wealth for the future. And we really like to invest in asset classes that will do well for our clients over a longer period of time. You really need to think about how that business is going to go over the next 5 to 10 years. And so you need to make sure that that business will adapt to change and ensure that those businesses pivot to where the growth will be.
Gary has invited Blair to visit a repurposed warehouse to teach him how to adapt to change, a critical lesson to learn.
This is Gary, who is a fund manager at Perpetual. Now, Gary, we've had some masterclasses already, and I think we've blown his mind a little bit.
Yeah, absolutely. I feel I'm getting to that point where I'm going to have to think about making some changes and some sacrifices of what we thought was the direction we wanted to go to maybe change it in a new direction with all this amazing knowledge I've been given. So that's pretty confronting.
Yeah, look, nobody wants to live going without, but you adapt and change to the environment you're in.
Yeah, that's right. And I think that what you were saying in terms of how your life cycle goes up and down, so do businesses and things that we invest in. And it's just understanding that and positioning yourself and changing and pivoting when you need to get to that end goal.
When you're looking at a company and trying to figure out, has this company got longevity, What's more important, the management, the CEO, the business strategy? Talk to me about how you come to that conclusion that this is a business that will be not only around in 10 years or 20 years, but thriving.
Sure. So when I talk to businesses, one of the first questions I ask is, talk to me about the culture of this business, which ideally has longevity. And often the businesses I like to buy are owner-managed businesses where their hearts are involved in the business. And it's about buying those businesses that have this really strong culture of hard work, adapting, so changing as trends change, to ensure that they continue to generate this good earnings stream.
Gary, let's talk about this concept of the pivot. The most famous example I can come up with is Kodak. Everyone took their photos with a Kodak back in the day. Now that company's obsolete. How do you identify companies that know how to change their strategy in time to capitalise?
It's often easier when you have businesses that have been around for a long period of time, where you can observe how they've pivoted and continued to grow. So there are businesses like Johnson & Johnson or General Electric who've continued to grow the business by observing technological changes in different industries and continue to invest in research and development to ensure that they continue to stay at the forefront of those industries.
I guess it's an opportunity for you, though, in thinking about what Gary's saying. Adapting to change may mean looking at a long-term investment strategy, but still chasing all the things that you're passionate about. It can just be, here's 3 or 4 things that Christy and I are going to do a bit differently to pivot in our personal lives so that in 10, 20, 30 years, we can still have the life we want.
I guess my history is, my pivot is like, throw it out the window, let's go try something new. And I like trying different things and taking those risks, but now the risks with young families and everything, you just got to be a bit more measured, have a little bit more of an idea and a bit more of a commitment. And I think what you're saying about the longer term commitment to a strategy is where my values have to go to.
So how would you describe your investing style then, Gary?
Our style is effectively buying high quality businesses that grow over time through cycles at value prices. And the way that we do that is to wait for a period of fear, which really allows you to buy a high quality business at an attractive price. And then lastly, we're buying businesses that have these strong balance sheets that generate a lot of free cash flow to ensure that they have money to reinvest back into the business to ensure that they can grow through time.
That's so interesting, to be so global, but yet to have such a condensed and focused perspective.
Yeah, and we're just trying to buy leaders or emerging leaders in different industries, and those businesses are spread around the world.
Yeah, it's very interesting, isn't it?
Good advice.
Yeah, I like it a lot.
Thank you, Gary. Thanks for spending the time with us
Thank you very
today. We very much appreciate it.
Sure, thanks.
If you want to learn more with Gary, head to theinvestmentseries.com.au, where you can take Gary Lawrence's masterclass or download our free ebook on becoming an investor from leading advisors. After the break, we'll put Gary's approach to the test as he pitches to the Guardians, the gatekeepers of the investment industry. Earlier, Blair had the opportunity to meet money master Gary Lawrence of Perpetual. Now, it's time to put Gary's investment ideas to the test as he pitches to the Guardians, the heads of the top investment research houses in Australia.
Hello Guardians, my name is Gary Lawrence and I'm the Portfolio Manager of the Perpetual Global Share Fund. Today I'll talk to you about the proven process that Perpetual has used in equities for over 50 years. We are value and quality investors, so invest in high quality businesses at value prices. We like to buy businesses that generate consistent earnings growth over time, that generate high free cash flow and have strong balance sheets. And we have strict criteria about what a strong balance sheet is. We have a team of investment professionals who travel around the world looking for these high quality businesses. We meet companies, management teams, we meet their clients. We also meet their competitors to get a good understanding of these businesses. And then we handpick a concentrated portfolio of 20 to 40 high quality stocks. Now, I'll talk to you about how we buy these high quality businesses at value prices. What we tend to do is take advantage of market mispricings, and that often happens when there's fear. A good example of that is when we bought into NASDAQ in 2011. In 2011, there was a lot of fear about their cash equities business. The market was scared that dark pools were going to take share from cash equities. When I looked into the business, I could see that only 10% of their earnings come from cash equities. In all the other businesses that they operate in, they're number one or number two. They're number one in market technology, selling their technology to over 50 exchanges around the world. These are the types of businesses that we like to buy. We like to buy businesses that will grow over the next 10, 20 years. So if you look at some of the other investments we've made, we've got large investments in online advertising businesses. These businesses have grown very quickly over the past 10 years, and we think will grow over the next 10 to 20 years. So to sum it up, Perpetual has a proven process of investing for over 50 years. We invest in very high quality businesses with sound balance sheets, and the Perpetual Global Share Fund has generated an absolute return of 20% per annum over the past 5 years.
That's really, really interesting because it's something, I guess, it's that technique of looking around the corner and, you know.
Do you feel like this has made you do that more?
Absolutely, absolutely, yeah.
Gary, tell us a little bit about how you think through your philosophy during different market cycles. Do you try to stay really consistent with the same philosophy, or do you pivot depending on the environment?
In terms of the investment process, it always stays the same. So we invest in high quality businesses which have a competitive advantage, and we invest in businesses with strong balance sheets that generate free cash flow. But in terms of how industries change, we understand that we need to change the types of businesses that we might be investing in if the industry evolves and changes.
Gary, you mentioned that the portfolio is quite concentrated. What does that mean for investors in terms of the variability of returns within the fund?
At Perpetual, all our funds are generally concentrated portfolios. The Global Share Fund's 20 to 40. The reason why we run them to be concentrated is because we want to know the companies that we own inside out, stay close to management, and we really only want to own the businesses that we have high conviction that will do well over time. If you diversify your portfolio, sometimes you diversify, sometimes you buy businesses that you're just trying to stick with the index, whereas we're more benchmark unaware, and it's just buying a handful of businesses that you can really have enough knowledge that they will continue to do well over time.
Gary, you and your team are totally Australian-based, which is terrific, and we like to see Australian investment professionals managing money for Australian investors. But what are some of the challenges, given that a lot of your competitors are based in the major markets around the world?
I guess the biggest challenge is the time zone difference. So a lot of your market is open at a time when most Australians are asleep.
Yeah.
But for us, we're long-term investors, so it's actually good to be outside of the noise and the psychology of the markets. We can basically just do our research in Sydney, then we can go and meet those companies or have phone calls. But I think that being outside of the US or Europe allows us to take a longer-term approach to investing.
Gary, there's a lot of global equity portfolios out there for investors to choose from. What do you think are the one or two things that really differentiate your strategy? Gary, there's a lot of global equity portfolios out there for investors to choose from. What do you think are the one or two things that really differentiate your strategy?
Please ask these questions.
The key things that we do differently are, firstly, even though we're value managers, we're not buying deep value stocks and cyclicals. We're trying to buy businesses that will grow through cycles. And also, we have strict criteria what a strong balance sheet is. And what that means is that if you are buying businesses that don't have much gearing, during periods of economic distress where earnings might be falling, or during periods where rising interest rates, those businesses tend to outperform because they don't breach their covenants and their earnings continue to grow irrespective of the cycle.
His answers are so precise.
Gary, you mentioned the importance of seeing the companies and meeting with company management. As an Australian global fund manager, what's your access like to the key people in the companies that you want to meet?
Because we're at Perpetual, and Perpetual is one of the largest fund managers in Australia, we do get wonderful access to companies. So we have a lot of global CEOs and CFOs coming to us in Sydney, but also we travel around the world going to conferences where we get access to the senior management, and we also go to their headquarters. So we do get this great access.
Gary, you mentioned that part of your process is to look for companies that have strong competitive advantages or are well positioned in their industries. Tell us a little bit about how you go about identifying which companies you think have that kind of staying power.
So what we try to do is buy leaders or emerging leaders in particular industries. Most of the businesses that we own are consumer facing and they've had their first mover advantage. So businesses like Google or Expedia, we look for the businesses that have the largest market share and maintain that market share and ideally grow it. And so if you can see that happen over time and you can see that they continue to invest in research and development to ensure that they stay ahead of their peers, then you can have confidence that they will continue to do that going forward.
And I suppose further to Heather's question, once you've found those quality companies, how do you then decide that they're good value?
A lot of people tend to compare an asset price to a similar asset today, but I don't think that's a really good way of valuing a business over the long run. We value businesses looking at valuations over time, 10, 20 years. And so we're always checking ourselves and looking at the past 10, 20 years for the industry that that business is in, as well as that business in particular. And ideally you're buying that asset and that business below the 10 or 20 year average.
That must mean he must buy much more established long-term companies, like you mentioned, like Google's and stuff like that.
Bigger businesses.
Yeah. There's got to be an element of security in that strategy.
Gary, thanks very much for your pitch today. We've really enjoyed your insights.
Thank you, Guardians.
Gary, good pitch. I mean, the big thing that I thought was interesting compared to some of the others we've heard is that they really go for this concentrated portfolio, meaning 20 to 40 stocks, whereas some of them we've seen have had 70 and 90. And so a bit of a different approach, but they seem like much bigger companies, and he's saying market leaders.
It's a very interesting strategy, and I guess coming from Perpetual itself, which is such a historic and strong older company, I guess, it's investing within their own mindsets.
They're all, so many global equities players, but no two have been the same, right?
No, it's so vast. And I mean, obviously Gary's performance that they said, the 20% over 5 years, I mean, that's astronomical. So it makes it very tricky if you're in the position to choose, then do go for performance basically at the end. But I mean, you've got to have trust and understanding, and God, yeah, it's a tricky one.
Well, I'll be interested to see what happens, what you've learnt and who you'd invest in and all those things moving forward.
Yeah, absolutely. I actually can't wait for that.
To learn more about growing wealth outside of property, visit theinvestmentseries.com.au or download our ebook on becoming an investor from leading advisors. Next time on Learn from the Money Masters, Blair meets Money Master Joel Fleming of UBS.
Investing is all about risk and return. There's a lot of change occurring in the economy, and we're looking for businesses that benefit from that change.
What will Blair take away from Masterclass? All this and more next week on Learn from the Money Masters. Remember, everyone's financial situation is different. The information in this show is not intended as personal investment advice. We encourage you to find your own personal advisor who can help you with your own financial future. Visit theinvestmentseries.com.au to find out how.